Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at LPAT. Let's take a look at what the indices have been doing and are likely to do in the coming week. Uh, so, the last 3 months, if you see, we have had a very indecisive price action, though we've been trending up and making higher highs and lower highs, but that's not something that gives you the right to be bullish based on the monthly chart, unless and until we have a nice rally or then a drop. We won't be able to look at swing trade setups. So it's going to be key to see where the prices move this month. It's going to be again a result oriented, a result month, a quarterly result and yearly result month. So markets will remain range bound. And then the election season is also starting. So we need to be careful about trading in the indices, which could remain more volatile and range bound. So that's the area which probably is going to be the key. If it breaks, we can come down all the way to these areas of demand zone. No supply zone on the monthly, and there is no demand zone inside as of now. The next demand zone, if we break this, is going to be somewhere close to 20,200, but that's quite far. I'm not sure if we will come there so soon. Coming to the weekly chart, that's the area of a picture of supply from where prices started coming down. So that's the area of supply zone from where prices came down on last Thursday. For the monthly expiry, Nifty went up pretty strongly all the way to nearly the all-time high and got rejected a little bit towards the end. That's still the demand zone that is under control. Now we have a very narrow range, trading range here, let's say from 22,000 to 22,500 as of now. And swing positions can be initiated all the way here. So markets may remain in a short-term trading mode. Well, again, markets could move up a little bit and pierce this stabilized zone and make a new high, which could be either a decoy or start of a fresh trend. We have to wait for this to happen. As of now, the trend is about, let's say, 22,550, 600, all the way to 22,000. That's a range which could be in play for the next week. Coming back to the daily chart, now here is where the interesting part is. That's the area of supply zone which got tested on the daily chart. So now if this supply holds, we could again probably come towards these areas from where the move started. And this demand zone is still holding up. So that's going to be the ring. Though we have pierced this, it's not close below that demand zone. So there is a good chance that prices, if we come here, prices could come down all the way to this area of demand zone. But probably not this week unless there is some bad news. Looks like the momentum might stay and we might range at higher levels, and we'll need to see how markets open tomorrow. On the smaller time frame, that's the area of supply zone which got tested. So this is the area of supply zone on the 75-minute chart. And we had a very strong fall from there in the last 75 minutes, which probably was more of expiry management. That's a very good area of demand zone. If it comes here, can look to go long. Also, can look at these areas to go long based on confirmation, because that's the area from where we made an attempt to move towards the all-time high. So that's going to be your range, let's say 22,500 to 22,200 on the intraday time frame, which you can use for as a reference for the next week. A quick look at India VIX. India VIX on the monthly chart is still in that demand zone. On the weekly chart, still moving up from that area of demand zone near the low points. Can potentially move up towards 13, 14, but it has dropped down below 13 levels. So you need to be cautious about swing positions. Since we are moving up from this area of demand zone, if volatility increases, the index could become more volatile and could trade in a wider range. So cautious approach towards index trading. Let's take a quick look at Bank Nifty. On the monthly chart, again, 2 months of, though prices have moved up again, just like Nifty, but it has still failed to give a new high, whereas Nifty had given last month a new high. This is consolidation again. That's the main area of demand zone, which is still valid for the monthly chart. That's a monthly area of demand zone, 42,000. Now, a little bit far-fetched for the next week. On the weekly chart, it's still again moving up from these areas of supply zone. And that's the area of demand zone, which is under control. Again, if you select Nifty, this is also a very narrow range that you will see from, let's say, 47,900, let's say 48,000, all the way to 46,000. So 2,000 point range is what you can trade the next week based on confirmations. If you break this, that is a main demand zone, which is still holding up. So Bank Nifty could remain range bound and may make attempt to move towards the higher side, and which could potentially take Nifty also up. On the daily chart, that's the main area of supply zone that you're seeing here. We hit that supply, came down. Again, this was more of consolidation and compressive price action. We're moving up again from that area of demands and on the daily chart. So that's going to be your range on the daily. That's the range. We could still move up a little bit higher. We'll have to wait for some pullback closer to 46, 750, 800 to get into a long position for a target of 48,000. There we have smaller time frame supply zones which were activated on Thursday, but that's still going to be the area of demand zone. And here on the daily chart, we can see some small areas which are holding up. So on smaller time frames, we could have potential demand zones there. That's a 75-minute chart. That's a supply zone on the 75-minute chart, which is the upper boundary for, let's say, tomorrow and the next few days. We have hit the supply and reacted to that. Now, probably if tomorrow Monday market comes down, we could probably move towards these areas of demand zone, which can be used to go long again and target, let's say, 47,500 to 47,800. If we come back here, maybe an intraday short, but this looks like a good area opportunity for long since it's going to be result week. But next week needs to be careful. Next week needs to be observed as to what price is doing. If we break this, there's another demand zone here, which is associated with a gap and can potentially push prices up all the way towards this again. So that's a range that on a 75-minute chart you can use to trade on the Bank Nifty for the next couple of days and a wider range for the next week. I hope that helps.